From thetraderguy.com, this is Chris taking a look at the CAD Swiss, and I'm looking at the monthly chart first, trying to get a big picture overview. And, you know, the one thing that should be very obvious is that we do, in fact, have a downtrend and have had for some time. Now, that being said, right around 66, we have a significant amount of previous support. So I'm going to go ahead and put a line there. You can see a little bit of a potential double bottom that was made earlier this month. As I zoom into the weekly chart, you can see that we did bounce quite nicely. Now, having said that, it does look like we are turning around and we're going to try to take this out. Now, the question, of course, is, you know, I had somebody ask me about the Swiss franc, you know, why would you go long the Swiss franc at this point? And, you know, it's more of a safety play than anything else. Keep in mind that crude oil continues to look vulnerable, to say the least. And that's what most Forex traders will trade the Canadian dollar on as a proxy for oil, if you would. Now, I understand that there's a lot of problems in the Swiss banking system, and they just bailed everybody out, and that does not necessarily lend confidence. But you should also keep in mind that in a credit bubble, which is exactly what we have right now, the devastation is kind of like a rolling effect. So we had problems in the Swiss banking system. Before that, we had problems in SVB and Signature Bank and First Republic. And then next it'll be something else, but they will look at the Swiss franc as safety, at least in relation to the Canadian dollar. So the fact that we started to give up some of the gains during the day does suggest that we're going to test this 66 level. If we break down below there, then I think things get really interesting. Where can we go? Well, the first thought would be 65 because of the psychology involved. You could also just try to continue this move and make 100% continuation. So since we don't really have a lot of at least on this broker, we don't have a lot of historical things to work from, you could just say, okay, well, we're going to double the move, because quite often that happens. Well, at this point, you're looking at about 300, and we'll just call it 300 pips, right? So that's 63. Could very well get there, especially if we continue to see one crisis after the other. I mean, you know, over the weekend, we had several central bankers come together and talk about how great the banking system was. That typically doesn't happen unless there's real chance for panic out there. So I like fading the CAD Swiss. You know, you can see here on the 4-hour chart, we've kind of broken down a bit from, say, 68, right? So I think I'll be looking for signs of exhaustion as long as we stay under 68. You know, a little bit of a room up to move to 67. I might start shorting. Now, 66 gets interesting because that's that double monthly double bottom. If we break that, or if we get, you know, let's just say I short somewhere around here or whatever. If we get close to 66, at that point, I'm going to move my stops to break even because I don't want to get hammered for a loss. So keep that in mind. I think we continue to see a lot of negativity. For those of you who buy into a lot of fib noise, we were at the 61.8. So that does make a certain amount of sense that you would see traders come back in, but we were also at 68. So let's be honest, that's probably more important considering that it was previous support, right? Nonetheless, this is a market that is very negative, and I'm looking to continue selling it.